Hello everyone, another video. It's been a while. It's Sunday, November 5th, 2:55. And if you're new, welcome. Subscribe, like, and share. Also, if you're not new, you could like that, smash that like button. um, I'm gonna do a quick market analysis for the upcoming week. And we're gonna see what has happened. So let's start with the charts. This is a weekly time frame, and immediately I just want to ask you, like, what don't you see around where the market is right now? And it's something that I think we there has to there has to be. I think we have to see that in order to maybe start thinking. Otherwise, I'm talking about wicks. I'm talking about rejection wicks as the market during these occasions here. You had wicks. So I'm also seeing this wick was filled with this bullish candle, which does not end in a wick like this one. And then I also see this candle that fails to close below the 50% of this candle, respecting this wick, and not, and obviously forming a bigger wick than a body. So initially, I wouldn't say that the market is showing it wants to turn around and come back down to recover, but we could see that throughout the upcoming week, and I'll explain to you how and why and possibly when. Of course, that's very difficult to tell you, but we could anticipate it. Now, um, I have these levels of 2025 and 2016 for a few reasons. Number one is these two candles, how they respect that 216 2016, I'm sorry, 0.50 price. And then 225, I think it's just simply a very strong psychological level that a lot of people could have their either take profit or stop loss there, or sell limit orders. Anyone who would be buying all throughout this big push would probably have their take profits anywhere around here. Um, so yeah, that's what could happen. I also want to measure this wick, and I am just going to put a line on the 50% level, because notice that's where that wick trades to and fails to close, and rather comes around, turns around. So I'm also going to put that price because it could be important as well. That's 249.30. I'm going to round it up to 249.50. But obviously that could be 250, right? I'm saying 250, but I mean 2050, 2050. Okay, so that having those price levels there, I'm also going to put a line on the opening of this candle, because it pretty much respects this resistance. So that's also an interesting pivot price. That would be the 1965.13. So yeah, that's the weekly time frame. I'm going to go down to the daily time frame. And now on the daily time frame, we can start to see a few things that are showing us that the market might want to trade up. I'm gonna talk about trading up now, and then I'll switch into the bearish scenario, because we could be having any moment now um, a flip side, right? I mean, the market has to correct itself. Okay, the question is when and could we anticipate that? Okay, I have a few analysis I'll show you at the end, but I'm just gonna keep marking these interesting areas. Um, Notice how the market is rebounding off of an imbalance area that traded into, which is over here. You see that? So that's where the market, if we extend this rectangle, that's where the market stopped and it's trading down. But we cannot ignore this kind of space that's over here, because despite these are wicks, they're also, there's absence of orders around here. Okay, so now would it get all the way up there? I don't know. We have to keep analyzing it, and I'm also gonna start drawing this line that's pretty interesting. That's that trend line that marks, because if we see something, I just copied and paste that line. Notice how it's pretty much the same as this one. If you see, it's kind of making sense for there to be a sort of channel. So if we extend that, we could be seeing a potential kind of retest of maximum highs over here, and maybe a liquidity grab toward 2016, right, at least, and then making that wick on the weekly time frame, which would be, I guess, more appropriate if we see that long wick up here, and then the body closing and covering at least this bearish candle, right? If it wanted to go short, I'm sorry. So again, I'm just trying to visualize that. And then let's go back to the 4-hour time frame now. 4-hour time frame. We are seeing something else that's very interesting. I'm going to adjust these lines. But notice how if I draw yet another line here, it's respecting of a diagonal, and that is the beginning of what could be a potential diamond pattern. And a diamond pattern is like the head and shoulders, a quite powerful pattern. I'm adjusting these lines, remember, and the diamond pattern is pretty powerful because it's just like a head and shoulders. They tend to successfully, I guess, how do I say this? Like they work. Okay, so whenever they do come out and they get confirmed and formed, their projections tend to very well get accomplished. So I have this. I'll show it real quick. I have this right here. So this is your probable possible diamond pattern, right? And we could have two scenarios before it comes down. The first one is for market to trade up toward these resistance levels and make that weekly wick. It might trade higher. I want to see this at least to 2015. 2020 maybe would be appropriate, and then have that collapse pretty much. And the reason why I think that could happen is because the market needs liquidity to come down. And in order to do that, it needs to go up first. It needs to induce buying. It needs to trigger all these buy stops that are over here. Also sell limit orders, right? So it makes sense for me before before next week finishes, at least for the market to trade up above these highs and then reject down. So that's my favorite initial idea. The other scenario would be the week opens and then kind of just play around here above this level, and then maybe failing to even retest these highs, these wicks, and then just fall down to this pivot area. And the pivot area is the 50% of the diamond pattern. Okay, and the diamond pattern, I measured it from this wick to that wick. And more of it being the diamond is just this range. Okay, the range that I'm using. And that 50% area of that range is a pivot area. So next week, pretty much tomorrow. Market might just want to still trade within this range that's at right now and the pivot area, and then choosing to break down, right? Kind of retesting these lows, rebounding back to the pivot area. And this trend line over here is the diamond's bottom right trend line. So moment it breaks it, you could have a few pullbacks and retests of such trend, and then just fall down. At least the same distance that there is between the bottom of the diamond and the top diamond. So this line that you see here to your left, this pink line, is the distance that I measured from here and to that line, and I rounded up to 1920. If you see my past videos, during this week of the 16th of October, we had 1920 as a key pivot price. So notice how the market, when it breaks it here, it trades back toward it, uses it as a rebound, and then it gives us our next push. So it's very likely that if market, whenever it does, comes back to 1920 or around 1920, is going to stop or reject first before breaking it down. Okay, so that's your diamond. That's your possible diamond pattern. And I also wanted to show you this as well. I believe you've seen this before in my Instagram, but this is where I wanted price to go to before coming down. 2020 and 2025. This red star meant that there was going to be the NFP. Now keep in mind that if we go into our news, right, our economic calendar, I'm sorry, we've got a few things that have happened. We did have pretty bad news for the US, but is it bad news? That's the question, because yes, there is a decrease in the employment change and a slight increase in the unemployment rate, but we have had a poll come out and talk about the fact that we had to see that in order for inflation to come down, they needed to control prices. So this, despite the fact, despite these are negative numbers, they're not that bad, which in the end is getting interpreted as good news. And I can say that because if we go back to charts here and we just study the S&P 500, for example, we saw how it just made a pretty big rebound, and kept coming up with multiple gaps and strength. So the market is clearly not seeing that those negative numbers as negative, right? And also, if we study the Dixie dollar index, we've seen that pretty big breakout of this consolidation area. This is the 4-hour, and if we go to the daily time frame, it looks kind of scary because it now seems like it's just starting to maybe kind of want to come back down, right? But we can't get ahead yet, because if I just really quickly illustrate what's happening, like where did the market stop, it would have to come down a bit more to this empty area if it meant it was gonna keep coming down. I could also draw these potential channel lines, and we could see market trade back up a little bit. Okay, if it does want to trade lower, it might want to just pull back up a little bit to these areas, 106, and then come down. If this is going to be a continuation breakout, it might just reach initially this empty imbalance area, right? A fair value gap, you might also know that as. But I want to show you the Dixie, because now what happened was we had these news, and that should have been something for the economy to kind of start coming lower, right? The dollar obviously took it pretty hard, and then we might see a rebound, is what I'm trying to say. And that is where it would make sense for gold to, if we go back to gold, for gold to come down, right? We have Powell speaking on Thursday, so keep that in mind. Keep that in mind. If we go back here on Thursday of next week, of this week coming up, we've got his speech at Thursday at, I think it's, here it is, 2. So that's going to be interesting. He's going to want to come out and talk pretty positively about the results and how that favors their mission to bring in inflation down to 2%, which has been his speech for the last month and a half. And so that could get interpreted, again, going back to the charts, as the dollar rebounding, like making a bottom to probably trade back up to this trend line at least, right? Or maybe break it, because it also has a bigger imbalance area up over here that it might want to go retest. You see that? So we just have to wait and see where the dollar is going to want to bounce and use a support. And then whereas gold, that could also get interpreted, the beginning of his speech, and I guess throughout his speech, you could have, that could give room for gold to trade upward and make that liquidity grab above these wicks, possibly even to its maximum high of 2009. And like I said at the beginning, I would like to see it at least at 2015, right? 2020, and then once there, all these orders coming in, buy stops, sell limit orders, and then the market with that liquidity in hand, then look its way to come back and finally breaking out of this consolidation area, because it naturally needs to come down at some point, right? And look for that second rebound, for a longer term, more sustainable uptrend. And that I can show you through this next exercise. I'm going to just clear out these lines. You've already had these levels in there, and I'm now going to go daily time frame, and I'm going to do something that, so you see we had that line here that represented the top of the diamond. We're going to do something. We're going to stretch it out. We're going to stretch that line out right about somewhere like that, and notice how it kind of matches this wick as well, and we're just going to copy paste that and then extend it down to the bottom of that impulse, of the first impulse, which is right there. So we could have this channel for a more appropriate, healthier uptrend, right, at a more decent angle. You know, everything that comes up very steeply, it would want to come back down the same way. Also, what do you see? We could divide this range, and notice how the 50% of that range matches, and it kind of makes sense for this to be right there. You see that? So it's not, if you try to visualize the market and kind of imagine it, it actually, it doesn't seem like a bad projection, right? For the market to kind of make its way down back to these areas, and then kind of stopping around here, and then deciding to bounce back around. You see that? So that looks more appropriate for, and if gold indeed wants to trade above, let's say 2100, or even reach 2100, I'm sorry, right? So yeah, that's pretty much, that's how you could anticipate this longer term bullish market for gold. Also, we cannot ignore that any moment this trend line, this bottom trend line, could get broken out of, right? So if that's the case, then that's just more confirmations for the market that's going to want to maybe um, retrace. We can also draw a middle line of the channel, right? And have that as also just a mapping this out. The market could also trade to that line, kind of consolidate around it and breaking out of it as well. Um, what else can happen? Obviously, this gap on the long run it has to get filled up sometime. But we have these imbalance areas as well. So initially, if we look over here, we have an imbalance area that the market is going to want to trade into. Right there, it matches these resistance areas, so the 1930s range, and then breaking out of it, right? Retesting this wick, the bottom of this wick over here, which matches this support around 1910, 1909. If that doesn't hold, then it's going to want to go to this bottom right here, where it matches this wick. And so this imbalance area gets fulfilled, right? And then using this trend line at a lower angle for it to rebound up. Okay, so we drew this to here, thinking and using the 50% range, the 50% division of this big impulse as the support. But that could also be, there could also be a second scenario in which the market doesn't really stop much and just kind of, you know, goes all the way down to here, fulfill that area, and that's when it uses that 61% rather, 61% retracement level right over here instead of the 50%, right? So these two levels are pretty interesting to see what happens once the market is there. I personally would like to see the 61% getting reached, which matches this support, because in the past these two areas got respected and that's where the market bounced off. So we didn't see this gap get filled, this imbalance area, fair value gap, or whatever you want to call it. And so that's why I would like for it to actually come and trade all the way down to there. That would be 1885 if you want to round it up, 1886. Okay, so that's also a potential area where one could start to study a second buying opportunity for a longer term, more healthier uptrend. So let's see, I'm gonna leave this like this. Let's put it right here. And let's go to finish this off because I don't want to extend myself. Let's go into lower time frames just to know what we should be looking for to be able to trade all this, right? So this is the 15-minute, and in the 15-minute I see this imbalance area that the market, was it this one? I think it was, yes. And so this did get traded over here, but this wick with this wick right here, so this space didn't. So that's what I wanted to show you. I'm going to zoom in now. Now we've got this right there. You see that? The market only went into it with that wick. So I think it would be more appropriate for the market to find and trade to 1984, around 1984, to bounce back up if and when and if the market breaks out of these support areas. Okay, and there's just a bunch of areas where initially this one is kind of important because this is where the market failed to break up a little bit. So it kind of stopped there, traded back down, and it only broke this with the news of the NFP, and then it traded back. But notice how it, once it traded under it, it went back up over it, and so on. So this is an interesting pivot area that the market, whenever and if it trades toward it and breaks it, it would use it as a trampoline to trade into this imbalance area, and maybe even trapping people to go short. So if the market wants to grab liquidity up, it needs liquidity from down first. So opening, this is what you could be looking at. Let's do this in the 1 hour time frame. So opening, you could be looking at opening, I mean like Sunday to Monday, which are like the, especially Monday. Um, Pretty much anything around something like this. I think it's gonna fail to even trade into those wicks, but pretty much this with some strength as well. Like this is not gonna happen slow, and then kind of coming back up here, testing those wicks. This might want to trade down, and then I'm gonna put this at 215, just because I want to see 215, and then use that to then just turn around and eventually make that pretty interesting drop, right? So this is Monday 12, and then New York, yeah, that makes sense. So I would this I think makes sense for New York to have that push to the upside, and then maybe in between 10 and 11 a.m. trade down. But we'll see. I mean, I'm trying to be a super wizard about it because it's very hard to anticipate when and where exactly these swing changes are going to occur. But it makes sense because London is going to want to induce selling, maybe turn around, right? So grabbing that bottom of the swing and opening and giving path to New York to do the opposite, which would be inducing buys to grab a premium price up over here and then collapse. So yeah, that's what I'm trying to visualize, and that's what you could be seeing for the opening. Guys, I'm gonna leave it right there. I hope you like this, and like I said, subscribe, hit the like button, share, comment, whatever you want to do, and I'll see you next time, people. Thank you very much.